welcome the opportunity to get to speak to an organization like this to talk about what I start with, risk management and then insurance. Because I think that's where it starts, and then insurance is really an outcome of what we do from a risk management perspective. So this is just a guide. What I'd like to do, there's lots of things I can talk about, but what I want to make sure I do is hit on things that are important to you. So as we go through this, I am someone that loves questions. So if I hit on something that triggers a question for you, or you want to expand on, or want me to expand on, shout out, because we'll go down that rabbit hole for a second. I'd love to do that, because I want to make this as relevant for you as possible. So, but we want to hit some highlights. We want to hit some points along the way based on what we were told would be interesting to the group and what might be impactful for you and your organization. So we'll start with some industry headwinds. This will be somewhat stating the obvious for the folks in the room who know obviously the transportation and road safety better than I do. But what I like to talk about is those factors as they relate to behavior patterns and risk management, and then obviously the insurance implications. We'll talk about insurance premiums, which I know is a subject near and dear to everyone's heart in the room. If you're running an organization, rates, risk management that impact those. Trends in the commercial auto claims. I'm sure no one's having claims in this room, but others are. And we'll talk about what might be happening out in the world with social trends, litigation trends, and then regulatory improvements. Well, we'll see, but we'll touch on all those things. So again, kind of stating the obvious from what's happening out there in the environment, but as happened, with everything, COVID impacted everyone, right? But probably no more so than healthcare for sure, but then obviously transportation in terms of when things are shut down, but still needing to move goods and services around the world, around the country, lifeblood of our commerce, right? And we've got a lot of economic factors that are impacting how organizations are able to run, how profitable they are, and managing both their own balance sheet, but also their risk. So we've got inflationary aspects, and those are changing. Really bad? Are they getting better? We'll see over time. How are things able to catch up? The cost of goods and services are going up. We saw a height of freight costs and freight rates, things like that. Things were going really well. New companies were starting. Operators were trying to start their own companies. Well, and those things have turned, it seems like. Correct me if I'm wrong on any of that. And now it's becoming more challenging from an economic standpoint for some of those operators are now not able to meet the demands, with fuel costs and other labor costs and things like that. So going back to the operator standpoint, which affects driver availability, and I'll qualify the driver shortage with qualified drivers. Are you able to get qualified good drivers to meet your demands? And that's a huge issue. Obvious impact from a risk management standpoint of the folks that you have out on the road, that are out on the road for your organizations, carrying your goods, but also carrying your brand and your balance sheet. Every time one of your drivers gets in a truck, they are driving around with your balance sheet. So supply chain impacts, constraints. Obviously, we've read enough about that of goods and services that are actually available getting out on the road and moving those things around. Relevant to the topic, obviously from a specific winter driving conditions and winter road conditions, but climate impact is a very broad topic and affects every aspect of what we do from a business standpoint. Huge impact from the insurance industry and insurance industry profitability standpoint with natural catastrophe type of weather events. But from a transportation perspective, the volatility of these storms and where they're happening and how they're happening has a tremendous impact on the transportation industry. Where you're having a mass freeze in all of Texas, where that doesn't happen. If you're having snow in Los Angeles, those are unanticipated and highly infrequent, or should be infrequent, events that people aren't prepared for. And that's where the insurance industry is looking at these situations on a kind of macro level, boil it down to transportation of, are organizations prepared for that? How do we price it? Are accidents going up? And are those cost of claims increasing because of the unpredictability of weather-related events? It's a huge issue and will continue to be an issue. Finance litigation. If you haven't heard this term, there's some different vernacular that goes around it, but when we'll get into the claims aspect, but this is where claims and litigation is being financed by third parties, meaning it is very expensive to take a case to trial, to a jury trial. You have plaintiff attorneys that will operate on contingents and things like that. medical costs start to stack up, who's paying for those as they go along. There are groups and there are entities, whether it be private equity, hedge funds, and other investors that will put money on the table to finance that litigation, to take it to a trial, and then they will recoup profits out of that. They will collect a piece of that. This is causing a significant impact from a claim litigation standpoint, and we'll see size of verdicts. Not a good trend from a transportation standpoint, really any type of liability standpoint, but severely and disproportionately impacting transportation. Okay? So, on to the good news. Insurance cost. Unfortunately, insurance premiums have been going up in the commercial auto sector. And I'll kind of lump commercial auto as transportation, trucking, and is a little a subset of that. But we'll talk a little bit in broader terms because all of it is impacted by claims in that space. We've had 50 consecutive quarters of premium increases in commercial auto. It's a long time, and that trend is not going to change. What has changed a little bit, and so 2023 second quarter premiums increased on average 10.4%. Whenever I throw out a statistic, I try and qualify what that number means. That is the average for commercial auto premiums. So, fleet, non-fleet. So that's a big universe that we're talking about, and that's the average. So think worse than average from a claim standpoint or risk profile is going to get higher than 10%. Better than average risk profile and claim experience is going to get better than 10%. So just so we're operating at that level. That's actually not bad from what we have seen in the past. So when I say average premium increases have stabilized, that's starting to level off between 8 and 10%. I'm sure I'm speaking to people who don't like paying 10% more for insurance every year, but just from where we've been, that's not the worst story. And I'll layer that a little bit with your primary insurance costs, so that first $1 million policy that you have, and then maybe you build up some excess limits, 1 million, 5 million, 10 million, whatever you want to stack on top of that. We're also seeing some stabilization in that pricing market, which was haywire, this time last year. So good news-ish. What is good news is we're starting to see more insurance companies coming back in and writing transportation risk again. Where for a while people were, the insurance carriers were leaving that marketplace. It's like, we can't make money in it. We're just going to stop writing until the price points increase enough to where we feel we can come back in and write it profitably. And that's really what it's about. Now, that being said, the market conditions and the insurance carriers coming in to write those risks are looking for the best risk. They're not looking for distressed risk. They've learned their lesson. We're not going to write accounts. We're not going to write organizations that are not going to have traditionally not performed well or having claims, because we'll talk later about what those costs can be. So understand that, again, the better than average risk have more market competition, are going to have better rate premiums going forward. Those that are not performing well, they're going to pay their proportion of that. Okay? When we talk about, again, risk management being on the front end, insurance should be the outcome of what you put on the front end from a risk management perspective. So when we talk about the premiums and the trends going up or down and where you fall above or below the average line, it is about risk management. Insurance companies and underwriters are getting very savvy in what they're looking for and highly scrutinizing risk from an underwriting perspective. So when you get all the applications and all the questions back, if you handle the insurance within your organization, you're familiar with what's going on. But they're very in tune at the risk management piece, because they know if you're not doing that, one, you're probably more likely to have claims. And two, if you're facing a litigation, you're in trouble, because these are the new expectations that are out in our society in terms of if you go to trial, what's going to happen. But safety metrics just to start. So your CAV reports, your SAFER scores. An insurance company will 100% look at that first because it's accessible. And if it doesn't meet their criteria, they won't even look at it again. You can tell them a story, you can paint the picture, all the things, but if you're not meeting at least a baseline, you're not getting someone looking at your risk that's going to quote it profitably or within reason. They just won't even play. So just a baseline. So that's something you have to pay attention to. And the organizations that you're affiliated with, this is something that is a big deal. Telematics, obviously from a technology standpoint, I won't get too far into that because I think you're going to hear a lot more about that over the course of the day. But in terms of cameras, forward-facing, back-facing, all the different technology components that can be or are available and can be utilized. We're starting to see insurance companies that used to recommend them now requiring them. If you don't have them, they're not going to look at your risk, or you're going to get not a credit for having them, you're going to get surcharged for not having them. So the mentality around the telematics piece has changed quite a bit because they've been shown to really improve the risk profile. So it's not arbitrary. There's quantifiable data that says if you have them, you are less likely to go to litigation, or you're more likely to get out of a potential litigated situation or severe claim situation. Driver motor vehicle records. Well, familiar, you collect MVRs for your drivers. You can see if they had any violations or extent of violations. Are they, does the insurance company going to approve my driver to add them to the list and that kind of thing? My recommendation, my piece is, and insurance companies appreciate this, is don't wait and ask for them to approve your driver. You better be the one making that decision. That better be a proactive effort on your standpoint, because again, that driver is carrying your balance sheet. If you're saying, well, I'm not sure if I want this person in the cab of that truck carrying around my balance sheet, then you probably shouldn't have them. Now, that is a very easy thing for someone to say, just not having to operate a transportation company, but that's the mentality from the risk management insurance side. The idea of monitoring driving performance and reviewing them, do we run MVRs once a year on our drivers, see if they're qualify, probably at renewal. The insurance company is going to require them anyway. Are you doing? Their insurance company is going to do them. Or do you have a service actively monitoring your driver records or driver performance? We're starting to see a shift, and the availability of those services becoming a little bit more less expensive and more manageable. But at the same time, because it's available, think about the last couple of bullet points. The idea that if you go to a jury, the jury is going to expect you to have everything and do everything you could possibly do, regardless of cost and regardless of practicality. So know the mindset that's out there. So when you're doing the cost-benefit analysis on something like that, which is real, understandable, but that's the mentality. If you could be doing it and you're not, that puts you a little bit behind the eight ball. Okay? Which leads it really into claims management and litigation management. So if you have an incident, how are you managing it? Have you been proactive in terms of when that incident happens, how are we handling it? Who are the people involved? Have we trained our drivers on what to say, what not to say? If they're in a motor vehicle collision, anything like that. Very important, because what's done on the front end of that is going to affect what's going to happen in the result in the back end. Okay, but I do think it's a point as we lead into what is in the mentality of those individuals that are going to sit in the box and kind of decide your fate if an incident goes to a jury trial. And again, this gets into the psychology. So now we're going to go into the litigation piece and thinking about when you have an incident, and if it does go to trial, what's happening from the plaintiff's attorney standpoint as they are attacking this case. And they are going after the very basic, fundamental mental elements of an individual and trying to create fear. And if you do not punish this company that has caused this accident, this incident, you're at risk, your family's at risk, and your community's at risk. And if you don't punish them through monetary damages, then bad things can happen to you. I mean, at a basic primal level. So I use this, if you've ever seen the movie Waterboy, the medulla oblongata, is the center of fear and aggression. Well, the basal ganglia is the part of the brain that protect, as the sense of automatic survival instincts and self-preservation. Well, plaintiff's attorneys are very savvy at attacking that very specific point, which has led to social inflation. If you haven't heard this term, you're going to want to get familiar with it, because this is a fundamental aspect of what's happening in our industry and in our society in terms of how individuals view the corporate environment. It's probably the easiest way to say it. But this is creating rising insurance costs due to inflation of claims dollars. So if you look at social inflation, contributed to $30 billion increase in commercial auto liability claims between 2012 and 21. Big numbers. Okay, social inflation drives higher insurance claim payouts and loss ratios. So when I say insurance companies stop writing transportation business, that's why, because if they have an incident, it's more likely to become a multi-million-dollar type event. And that's just been the trend over the last decade. And that's when we get into nuclear verdicts. You might have heard that term starting, kind of working its way around over the last few years. But we can define that because I think it's important for you to understand what that is, because it can seem kind of ambiguous. But a nuclear verdict is defined as a verdict over $10 million, and which is commonly now a verdict that is outside of what you would think would be normal or appropriate in a given situation. So excessive verdicts driven by jury drive to punish the defendant. Again, back to, if you don't punish this person and send a message to everyone else, bad things happen to you and your family. That's where that's coming from. And it's driven a lot by non-economic damages. So this is your pain and suffering, your loss of companionship, your mental anguish, and then the punitive damage piece that goes along with that. That's where the big numbers come in. So National Law Journal, top 100 verdicts from 2015 to 2019, tripled in terms of the size. So from the average, went from 64 million to 214 million. There's a 30% increase in verdicts that pierced the $100 million threshold since 2015. And the average verdict over $1 million increased from 2.3 million to 22.3 million within the last 9 years. So a massive spike in terms of the severity of a claim event. From an insurance company standpoint, this is a very bad trend, especially if you have any claims frequency. And from an insurance company standpoint, I am not an insurance company, I'm a broker. So I have to understand the mindset of that in order to help advise clients. So that's where that mentality comes from. But understanding that if you have claim frequency, meaning the number of claims, any one of those incidents could become a severity claim very quickly, especially in today's environment. Some examples of these nuclear verdicts. And the interesting about these is this ties back to that risk management piece, right? We have one where they have negligent operation, inadequate driver training, they're in the scope of employment, 260 million, and it got reduced to 247 million. Wow, right? A rear-end collision. Plaintiff stated that he was not injured. However, the company didn't follow its own hiring and training policies. The driver had 3 traffic violations in the preceding 3 months and drugs in the system. But again, back to monitoring MVRs versus reviewing them over, at a point in time every year or something like that. But as a monitoring, could you have caught that trend, or this basically was an accident waiting to happen? That's where that comes from. Even though the plaintiff said they weren't injured. Again, punishing the company. And then a collision, this really relates to a dram shop type situation, but again, you can see the trend and from a social inflation and juror standpoint. So why do we care? Well, changing attitudes toward corporations plus increasing aggressive plaintiff attorneys means an unprecedented growth in nuclear verdicts. Now, and I think it's important. Just because, maybe you're not the the biggest name on the street, or you're not going to you're not in the paper every day, but in your own community, in your own state, and in your industry, you're part of the industry within transportation. Where if you're a big fish, you're a big target. Is really the theme of this particular thing in terms of why we should care. And as I've stated, nuclear verdicts, that's going to impact your insurance premiums. And that impacts the insurance company's profitability and the industry as a whole. So we want to create more competition with insurance carriers wanting to write transportation-related business rather than less. And again, the risk management piece, staying proactive from that standpoint, is the best way to do that. From an actuarial standpoint, social inflation, nuclear verdicts attributed $20.7 billion to the cost of commercial auto claims over the last decade. This is outside of normal inflation. So this is an actual event that is having a direct impact. Some stats. Of all personal injury claims, 52% were a result of motor vehicle collision. We don't say accidents, motor vehicle collision. 70% of people who filed a personal injury claim received a payout. Of those 70% who held out for a better deal received a higher settlement. Payouts are nearly 3 times higher for plaintiffs who are represented than those that are not. 67% of personal injury cases settled outside of litigation. Plaintiffs were successful 61% of the time with auto litigation. It's a tough trend. The claim or the incident that doesn't happen doesn't go into this stat. And that's really the risk management piece. Is everything you can do to keep an incident from happening, from training to education. Road safety, huge issue. When you talk about from a winter driving condition standpoint, this is general trends. Take winter conditions and just create an exponential probability of something bad happening. So it's a huge piece. And tying in really from a road safety, road conditions standpoint of in states, if funding's an issue, if they're not able, if you're not able to clear roads, if you're not able to keep them safe, and that becomes, there's a quantifiable trend of increased frequency of accidents related to those conditions, you will see increased and disproportionately increase in rates and premiums related to that geography. Insurance companies are very, very savvy now and have very good data sets and are mining that data at a very granular level and know if they're having increased claims in certain months of the year, winter months, they will take that into account in terms of what those insurance costs are going to be. So what can we do to protect ourselves? Again, I'm going to kind of beat the risk management drum pretty quickly, but it's about being proactive. It's about anticipating the things that can happen. Plan for the worst. Treat each incident as if it could be the big one. So do not take an incident lightly, because all of a sudden, someone's represented, that thing turns on a dime. Okay? Leadership, place leaders who recognize what's happening and understand, are educated on what's happening in our society and how that impacts litigation, which will go into knowing your resources, how, are you mobilized, who's the carrier you have, their claims adjusters, your attorneys, if you have preferred attorneys that how they are going to operate, if they're aggressive, or they know how to manage the system, investigation, and then obviously just a total risk management philosophy. Understand who's fueling the litigation. Know who those plaintiffs' attorneys are. Do they have a reputation for getting financing for those litigation, those claims? It's a big deal. Will we see some changes because it's unregulated. It's just something that's happening, and it's a good trend that's not going to change because these dollar amounts are going up. So there's more opportunity for returns. That's just what's going on. Okay. These last two are really about being present in that litigation situation. Make your company human is the biggest thing. Be there, show your face, make your company human. You're not a big entity that's out there to hurt people. You're a person too trying to do the right things. Trying to feed your family, feed the families of your employees, trying to operate as best as you can, be human in that environment. Regulatory improvements. We are seeing some activity in various states around dealing with this issue. Not specific to transportation, but it has a very specific impact in transportation and commercial auto. And some of these tort reforms are looking to limit the number of frivolous lawsuits, basically somebody filing a suit to get a quick payout, those types of things, availability of quicker summary judgments if there's not appropriate evidence. In Florida specifically, anytime you have a natural catastrophe or any type of big incident, you're going to see a claim from a particular plaintiff. You're also then going to see a very quick bad faith claim toward the insurance company because either they don't respond, what they would say is appropriate timing around data collection and discovery, things like that. Not a good situation. So an insurance company says, well, if we have a claim, we're behind the 8 ball, and anything that we do, we're going to get this anyway. So it just cost us more money. They're going to write less of those risks in that particular jurisdiction, or they're going to charge more. That's just the economics of it. So we're starting to see some move in that space. And the other piece in Montana and Louisiana in their tort reforms is really about the calculation and the amounts of economic damages, medical costs specifically, that are going into the calculation of damages in a litigated claim. And then obviously the non-economic damages are a lot of times a function of those economic damages. So if you're able to control and specify what are actual damages, it helps in terms of the calculation of non-economic damages. So because what happens is you have actual medical cost or specific, actual incurred costs versus these phantom costs that kind of get baked into this number and really is meant to inflate this number, which leads to an inflated non-economic damage number. So we're seeing some movement in that space. Interesting, could be good, not hard to determine the ultimate impact. Insurance companies aren't going to necessarily react, say, oh, well, this is going to be a much better geography to operate in. They're going to wait and see the actual impact of this. This is not a silver bullet, something that can help. But again, back to the control the thing you can, which is the risk management piece, which is how you operate within your organization, training, development, consistency in following those procedures that you lay out. It's not a procedures you put, you write, you put in a notebook, you put on the shelf, bring it out every quarter or something like that. It is an active, living, breathing document. So that's really what I've got. So again, tough news, but it's news. Would love questions and feedback, and maybe to hear from your perspective. If you've had to deal with any of these situations from either litigation or particular claims instances that you've seen this in action, great to hear. Or any ideas or things that you're doing within your organization that you seem to be helpful from a risk management perspective. I'll open that up to the group. I know insurance, risk management, tough right out of the gate. Like I said, it's just going to get better from here.
If anyone has a question, hold on, I'm the mic guy now.
Thank you for your presentation. I'm Senator Chuck Winder from Idaho. What can the legislators do to help you with risk management? Are there trends around the country where they're limiting these types of verdicts? Is there any help that way coming from a national level or any states that are good examples? You listed Montana and Louisiana, but I personally, I couldn't read it from this distance as to what it was.
So yes, I mean, at the federal level, I don't know of anything that's happening at that level, but it is a state-by-state type initiative. And it's really about, tort reform, and it's about quantifying what can be included in terms of actual dollars that have been paid in terms of damages, and then regulating or controlling what can be inflated or trying to eliminate what can be inflated in terms of non-economic damages. Because that's what happens is, plaintiff attorneys say, okay, well, here's all your medical costs. Oh, by the way, we're going to exacerbate those costs and balloon them as high as we can, because we're going to use that number to calculate the non-economic damage, the pain and suffering, the mental anguish, the loss of companionship, all the other intangibles, if you will. And then once we have that, now we're going to push the punitive piece. Now we're going to do the punishment stuff. So in terms of regulating or legislating around what's fair and should be actual damages would be helpful. And also too, from a support and funding of those things that will support risk management and support the right human behavior. Because a lot of risk management is really about helping manage human behavior. Because in the day, we've got a person behind a truck until we don't have a person behind a truck, which I think is going to be talked about later. There's a human element involved. So how do you support and encourage initiatives around that? Is always helpful.
Thank you. Such an excellent presentation. It frankly, gave me a lot of insight that I very much appreciate. Do you have a breakdown or any distinction between the costs from summer driving and inclement weather and the impact inclement weather has on these? Are the judgments equal to when when natural conditions come into play?
I'm sure there are distinctions in terms of claim frequency during certain periods of the month, or even certain areas of the country that have inclement weather or winter weather type events. So yes, probably I would think so. So I would be happy to dig into that for you. What was the second part of your question? Sorry.
Well, that's really it. Just inclement versus non-inclement driving, and then are the judgments still the same? Do they hold culpability equal to the driver and the company and the trial attorneys and those who are trying to triple the normal payouts, as you'd suggest?
I think how they would approach it in terms of the size of those claims, I don't know if there's much of a distinction. What I would say is a distinction is there are more players involved in winter driving conditions when you talk about road clearing and then preparing and snow mitigation and the products being applied to roads and things like that. You have more, and also at a state and local level, from a government standpoint, can also be pulled into those types of claims if they weren't doing the right thing, if they didn't shut down the road, or they did shut down the road, and there's more players involved when I think you're dealing with winter driving conditions and those claims resulting out of those. Also, when you have ice on the roads, you have longer chain of accidents, right? The string of collisions gets longer. So yes, that creates a bigger overall claim impact. In terms of individual driver, the company involved, I think that's going to be viewed somewhat the same, but more players can be involved in a winter driving scenario.
First of all, I'd like to say thank you for your presentation today. It was very informational. These lawsuits where you're having equity groups, fund these litigations, it seems like we're going away what the original, it was these payouts were originally for the person suffering, not for others to make money. And I think that's a big threat in our country. What's the likeliness of more states, and how fast are these types of deals that are limiting those claims or trying to keep it more towards the person that received the greatest impact?
Slow, honestly. I mean, these things didn't happen overnight. This is a very slow moving process. Florida's had these issues for a long time, and it's just starting to see enactment reform. And a lot of it's actually driven by the number of natural catastrophes they have that are driving some of these claims, not really transportation, but transportation could have be impacted in a positive way from that standpoint. But you're absolutely right. When you saw the numbers of the increased amounts that plaintiffs get when they are represented, well, obviously they're not getting all of that money. They're not getting the $300 million. There are a lot of mouths that are going to be fed first, quite frankly, before they're going to see a dime. So I think that is something that should be highlighted in a very real way, and from a PR and a messaging standpoint, because plaintiffs, a bar is on every billboard, on every corner, every 10 minutes on the TV. They're way out messaging us from that standpoint. I think that's part of the battle, is to create an equal and opposing message to that point, and attack the reptilian, reptile theory of the sense of security, at a human level, at an individual primal level. So, but yes, you're absolutely right. That is something that should be highlighted, because yes, that injured party is not getting all of that money.
So when you're calculating the risk, it seems like equipment loss and product loss is almost non-existent in your consideration.
So,
because that used to be what we were insuring was against equipment and product loss.
I appreciate you pointing that out, because my presentation is very liability heavy. But when we talk about commercial insurance, auto insurance rates, the physical damage portion of that, and certainly we can get into the cargo aspect too, hugely impacted in this situation. To that point, in a natural catastrophe type situation, which is driving a lot of insurance premiums, one of the biggest losses from Hurricane Ian in 2022 was auto physical damage. When that flooding came through, it destroyed hundreds of thousands of cars, trucks, equipment. Absolutely. So not to ignore that, it's a huge part of it. I think from this standpoint, in terms of from a risk management, how to control that loss is there's some elements from a liability standpoint, the risk management piece that can be part of that. But when you talk about winter driving, road safety, those things, the cargo and auto physical damage piece is a huge element in terms of what's driving overall auto insurance premiums as well. And I would say the cargo market has felt that as well. So we've seen kind of an equal, maybe not as extent, but an impact there too. So no, that's a great point. Thank you.
With the transportation department, I'm with YDOT itself. Can the industry that you represent start working more with those cameras that you were talking about that would help protect them against fraudulent claims? But also, could it be used to give to the transportation departments or put on their own websites what the road conditions are out there while they're driving? Our pressure is to put some on our trucks to do that. However, people get anxious and angry about it because they look up and they see powder blue sky and they're wondering why we have it closed in Wyoming and costing them billions of dollars a day per your statistics that you have there.
Right.
How can you help us pass out information that the road is actually impaired and cannot be passable?
That's a great question. You know, it's one of those situations where sometimes you can't win, but looking at it from a public safety standpoint, everyone's going to have an opinion based on their own individual needs or interest. But from an overall public safety standpoint, having cameras and having the ability to feed that into a system that can demonstrate the why you're doing what you're doing, I think is incredibly important. And I think the investment you would make into that would yield that kind of return of public perception. But at the same time, you'd also get blamed if you didn't close based on that pressure that you're getting and something bad happened. So, I mean, you know, which side of the coin you want to play on? I mean, in public safety, you know, you want to play on the more conservative safety side rather than maybe, you know, public pressure, if you will. But appreciate the position you're in. You know, kind of can't win if you lose, right? But yeah, the telematics piece and the camera and the real-time footage, you're almost also combating social media, where if you come out like, well, road's impaired, here's what we're getting, somebody's somewhere else and they're posting, it's fine, whatever that case may be. That stuff's going to happen, I think, from the standpoint of what would you feel comfortable defending in litigation in your decision? Now, if there's an ability to show that and demonstrate that in a more real-time way, absolutely. Obviously, there are costs to that. Where do you put the cameras? Where are you most exposed, or where do you have the most situations where that comes into play? Obviously, kind of do your cost-benefit analysis on that, but put yourself in a position to be able to defend yourself in a litigated situation. Even as a government entity, I think, just from that mindset.
I want to mention that insurance companies are starting to pay for telematics and cameras in people's trucks. Depending on like a Great West, they have programs that they'll actually put it in. Just get the company. So they are addressing it that way.
Yeah, absolutely. I mean, the insurance industry wants to incentivize you to take those steps, those risk management steps. They know it's expensive. They know there's a cost associated with it. So look into those programs, depending on who your insurance company is. They may have either discount programs or some sort of element that can help support that. Investigate those. And there's lots of companies out there that do it. They do it in different ways. They have different levels of monitoring and things like that. And there's costs associated with each one of them. But what we have seen is investment in that has been an immediate return on either incidents that were deemed to be not at fault that could have been otherwise had that camera and that footage not existed, and could have turned very nasty very quickly. So it can take one incident to recoup that cost, just like that. But there are programs and there are discount programs, incentive programs out there from the insurance company industry. Or you can, as an organization, leverage some of those purchasing aspects as well.
Thanks for the presentation. I'm Representative Christofferson from Utah. I was just interested in how fast the award for claims is increasing, and how high those claims are. You showed 3 examples of some states that have had some reform or whatever, but I would think that the insurance company would be, lobbying state legislators pretty heavily to reform some of those awards. Have you seen some action that way? And then I have one more question.
Sure. I'm sure they are. I'm sure they don't want to be as, they may not be as visible, I would say. But we're also talking about the plaintiff's bar is pumping a ton of money in messaging from a lobbying standpoint to make sure those types of things don't happen. So it's, a little bit of an arms race from that standpoint.
Okay, thanks. And then it's shown on one of those slides that it's important, or you said it's important to know who's funding the litigation. How does that help you?
Well, it'll help in terms of how aggressive they're going to be in either settling or trying to take it to trial. So you can formulate your litigation strategy around knowing that information. I think that's helpful. No one wants to pay a claim that shouldn't be paid. If you're not at fault, why should we pay? But you also have to understand what you're exposed to in the event of that claim continues. And if it's being financed, and if it's getting financing, then they feel like they have a strong case, and a case that they take to trial, they're going to win, right? So it's a balance, and it's painful to think about going through that. But if you know what's on the other side of the table, in any negotiation, if you know more what's going on the other side of the table, the better negotiating position you can be in. So it's really about that, having more knowledge and understanding that dynamic that's in play. So you can fight on principle, totally understand, and who wouldn't want to, but also then there's a reality of what's happening in our society and our environment. So it's trying to find that right balance and pick the best opportunity where you can come out successful and you're not. One, the insurance company is going to have opinions about that because they're paying for the defense. They're going to pay for the judgment, assuming from a limit standpoint what you have in terms of coverage. But from a reputational standpoint from your organization, do you want to? Because if it takes it to jury, you're on the front page of the local newspaper or in state or whatever that case may be. So you have to manage that piece too, which again, painful to think about because you want to fight on principle because you're doing the right things, but understanding that environment. And if that's happening, you know what you're up against. Yep.
So again, thank you for your presentation. It's very informative. Are you aware of anything in Utah in this regard going on? Would be my first question. Then the second one, kind of an obscure question, but I remember when I was younger, I heard the story of advertising was severely restricted in terms of encouraging litigation for injury or whatever it might be. Was that really the case back 3 or 4 decades ago? And if so, are we seeing any move back that direction that you're aware of?
There might have been 3 or 4 decades ago, I'm not sure. But I think we know today whatever impediments to that are either gone or have been worked around because we see just en masse advertising from a dozen law firms in every state, and you can't drive down any highway in any state that you're not going to see every 2 miles a personal injury attorney advertising something. And now they might have to mess it around. They might not be able to use some of those statistics of, well, you're like get 3 times the amount of what you get if you don't take an insurance company settlement. There's some regulation around that, some rules around that, but they don't have to get, now, once they get them in the office, now they can talk about that kind of thing. So yeah, I'm not sure from an advertising, how things change, but it's not slowing down, it's not going to, in terms of the amount of these, ads that are, people are getting bombarded with, and they're injured, they're sitting at home. And the same applies in workers' compensation and, other liability type scenarios as well.
Anything in Utah?
I'm sorry, I am not aware of anything specific in Utah. There's some folks in the room that might be able to speak to that, so not to put them on the spot, but no, I am not specifically aware of anything.
this isn't a question, but we can learn from our cousins in Europe. They cap liabilities and they penalize frivolous lawsuits better than we do. So from some of the questions that came up related to how could we do better for our people would be working towards reform that would hit those two buttons. And you don't have frivolous lawsuits in most of Europe, as well as the crazy verdicts.
Yeah, no, thank you. Absolutely.
Well, let's give a round of applause to Mike.
Thank you. Appreciate it.